Merry Christmas, ladies and gentlemen. good m- good morning. Let's quickly confirm this. If you can see my screen and you can hear my voice clearly, I will be glad that you type in hi in the comment section so that we can get this session started. It's a Friday. Okay, what do we have right here in the comment section? All right, thank you. Thank you, guys. Farah Fofo, good morning. Merry Christmas in advance. Hey, Carrie, good morning to you. Merry Christmas in advance. 717798, good morning to you. Well, I'm so excited to be here this morning, and I welcome you to yet another promising session on the X Trend Speed Live Hub. My name is Sheriff Daramola, and as usual, I will be taking you on a trading journey in the next 1 hour, where we shall be evaluating the financial market using technical parameters to identify trading opportunities lining up for us today. So I can see IMAX in the house. Merry Christmas in advance to you too. I hope you're doing well today. All right. With that being said, let's dive into the charts and let's see what is really going on in this market right now. But before we go into the chart, there is a couple of macroeconomic events that I want us to look out for while we evaluate the financial market. So, right here on the economic calendar, we have a couple of events coming up today. I think in the next 3 hours from now, we shall be having the durable goods order for November. And then we also are going to be having the non defense capital goods order, which is also going to be coming up today. And there is also a positive headline from China that the government announced that there will be some ease in travel quarantine restriction for foreigners starting from next month. And I think this is also a very good news for the financial market, which will also be affecting the oil commodity for this week. So we are going to be looking at all the parameters that's going to be affecting. Likewise, don't forget, we are going to be looking at it from a technical standpoint. As we know here, we always want to understand the psychology of price movement in the market before making any informed decision on all the instruments we have been monitoring since the beginning of the week. Well, it's a Friday, so what we are going to be doing today is to be doing some rounding off on all the pairs we have been monitoring since the beginning of the week. And remember, we are heading towards the holidays, which is coming up tomorrow, and there's going to be some withdrawal of liquidity from the market, which might likely slow down the momentum of price action. So we are going to be taking all this also into consideration while we trade. So we are going to be rounding off, moving our stop loss accordingly, locking some profit so that we don't get caught up in any pullback that might likely happen as we head closer to the holidays. So with that being said, let's quickly review all the pairs we've been monitoring and let's make a decision for today based on the current market structure. So as usual, the first commodity we are going to be looking at this morning is the US oil. And right here on the US oil, remember we have been in a profitable trade since the beginning of the week as we were able to successfully take advantage of a buy opportunity right above the $75 level area to give us that huge move. And in fact, we had multiple entries here. Remember, we took advantage of the breakout of the 76. We took advantage of the $76.40 level. We also took advantage of the $77.60 area. And yesterday, I told you yesterday that we should be waiting out for a signal in the form of either a breakout of the $80 level. And remember what I said here yesterday regarding the take profit target of the buy positions we took advantage of. I told you that I have a TP target sitting right around the $80 level, but unfortunately for us, price was unable to get to that TP level before we started witnessing selling pressure below that structure to further bring price to the downside at that point. Well, it's okay. We were taken out of our position, and definitely we should be in profit on all of the positions we took advantage of since the beginning of the week. And during the later part of yesterday's trading session, I mean during the New York session, I begin to see the selling pressure here, and I was able to take advantage of the breakdown of the $78.35, which took me down a little further into the $77 area before I started seeing bullish momentum, which actually took me out of that position at break even. So it's a very profitable ride for us on the US oil for this week. And this morning we had the situation, as you can see here, as soon as price action tested the $77 level. This level also shares a confluence with that bullish trend line we identified on the 4 hours time frame. Let me quickly show you how important that trend line is here. So you can see what we have here. So we have this trend line which has been holding by pressure since the beginning of last week. After connecting the series of higher lows here, we have this bullish trend line, as you can see here. And what happened yesterday was quite interesting, as we saw that price action came exactly to do a test of that bullish trend line, after which we started seeing buy pressure begin again from the $77 level. And one thing about the structure here is that if we use our Fibonacci retracement tool to take the bullish momentum from the $76 level and run it through where price action got to during the New York session yesterday, before we started seeing the bearish move, we can see that it falls exactly at the 61.8% level. But I actually did not take that buy opportunity right above that structure, as I was looking out for confirmation. But if you are taking that move right around that level, very well done to you, as you will currently be in profit right now. Well, during the early hours of today, I shared this on my public platform, where I was looking out for buying opportunities around the $78.35. And one thing we observed here since the early hours, since the late hours of the New York session yesterday, was the fact that price was caught within a consolidation phase between the $78 level and the $78.35 level. It was actually a very tight consolidation phase, which showed a little bit of indecisive uh, um, play around that area at that particular point in time. And so what we're actually waiting for whenever we have such a flat channel like this is that we want to be waiting out for price action to either break out of the channel, that is the breakout of the 78.35 level, or the breakdown of the $78 area, to give us a confirmation of where price will be going. And in fact, during the last couple of hours now, we saw our price climbed above the $78.35 level to incite another wave of bullish momentum. And if you are taking advantage of this move this morning, very well done to you, as you will currently be running with over 80 pips in profit at this particular point in time. So well done, guys, if you are taking advantage of this move. So what we want to be doing right now is to lock in some profit. Let's protect our position against any sudden pullback that might likely happen at this point. And one thing for sure is that we have been profitable here, so we don't want to um give back to the market whatever we have made so far. So let's lock in some profit. You could place it at break even, or probably somewhere right below the $78.50 level. Lock in some profit there, and let's see what is going to happen if price is going to come back into the $80 level, which has been our long-term TP target area since the beginning of the week, or are we going to be having a breakout of that structure? So now, for those who had missed out on this opportunity this morning, let's see what is really going on in this market. Let's see if the market is going to be presenting us with another opportunity to join this trend continuation to the upside. Now, there is one catch here that we also need to take into consideration while trying to make a decision for today. Well, the first thing I want to say here is that we can see that we had selling pressure right below the $80 level to emphasize some strength in the sellers at this particular point in time. So with this bullish momentum that started this morning, is it going to break out of the $80 level? So this is at the point in time we need to be very, very careful, as we are at a critical point in the market right now. Now, in order to make you understand the true nature of what is really going on in this market, it's very important that we see how important the $80 level has been in the last couple of months. And if you remember vividly, at the beginning of this week, we were able to identify that structure right on our 4 hours time frame, where we saw how the $80 level has been a major determinant of price action. So look at what happened here during the last week of the month of November. We saw how the $80 level was holding as a selling pressure at one point in time before price broke above that structure. We saw a breakdown here again on the 23rd of November. Price came back to do a retest of structure. We saw selling pressure there. We saw another selling pressure here on the 29th of November before the breakout, and then buy pressure right around this area. Then during the first week of this month, we saw the significant breakdown of the structure to emphasize the strength of the sellers at this particular point in time, respecting that descending channel that we identified earlier. And now with the impulsive move to the downside at the beginning of the week of this month, we saw price coming down into the $70.50 level. That was in fact a huge impulsive move, giving us a clue of how strong the sellers are in this market. So there is a likelihood that this move, this bullish momentum that we took advantage of since the beginning of last week, remember we have been riding on this bullish momentum since last week's trading session, might likely turn out to be a retracement of that impulsive move, which might send price crashing further to the downside. So that is one scenario that we want to be taken into consideration, considering how the $80 level is positioned with the current market structure. So now that is one scenario we are looking out for. So if price does not break above the previous high here, then we might likely be seeing a reversal pattern in the form of a double top structure that might likely send price crashing further to the downside. And if you see what happened here during the first couple days of this week, we saw the breakout of the resistant level of that descending channel to give us a bullish signal. So price might likely, if we see a reversal pattern around here, price might likely come back to do a retest of the structure before the incitation of another wave of bullish momentum. So what I would like to say here based on this current structure here is that we want to be patient. So if you had missed out on the buy opportunity that started yesterday right above the $77 level here, I would advise you to remain patient here and wait out for let's see price break out of the $80 level here, taking out all the sell position around this area to give us a clue of how strong the buyers are at this particular point in time. So if a breakout of the $80 level happens, followed by buying pressure right above the structure, then we want to be thinking of adding more position to our existing trade. And if you are not yet in this buy position, well, this will have been a good opportunity to join that potential rally to the upside. But if price does not break above the previous structure here, then we have no other choice than to start looking out for selling opportunities. So what I'm simply saying here is that for those who had missed out on the buy position that we took advantage of here this morning, well, I will advise you to remain patient and wait out for price action to get into the $80 level, where we want to see how price action is going to be relating to that structure. Are we going to be seeing a breakout of the structure to give us a buy opportunity, or are we going to be looking out for, are we going to be seeing a reversal pattern with selling pressure on our lower time frame to incite another wave of bearish momentum? So on the US oil here, if you had missed out on the buy position we took at the $78.35 area, one thing we want to be doing is to remain patient. Let's remain calm. We are already profitable on the US oil for this week, so there's no point being in a hurry to join an unnecessary trade. So let's remain patient here. Wait out for a breakout of the $80 level, buy pressure around that area on our lower time frame. Then we could be willing to join that rally to the upside. So these are my scenarios here on the US oil. It's a very simple setup here, which requires no further holistic view on the daily time frame. So if you have any questions regarding what I've just explained here, or you need further clarification in a particular structure, any area here, feel free to drop your inquiries in the comment section, and let's see how I can be of help in that regard. I'll be taking the next 10 to 15 seconds to read through the charts and see if there are any questions before we move on to the next option. All right. Okay. So what's happening here? Hi, Francisco. Good morning to you. Dorothy, good morning. Merry Christmas in advance. 651, thank you very much. Merry Christmas to you too. 775, good morning. Merry Christmas as well. Who else do we have here? Okay, Merry Christmas, Petrolair 19. Good morning to you. All right. Okay. So, in the absence of no questions here, I want to assume that we are all good to go. So, I will have no choice than to moving on to the next option. So the next option we are going to be looking at this morning is the US Tech. And in fact, the US Tech moved significantly well in our favor yesterday as we were able to, at least you will have closed with a minimum of 400 pips, at least if you only have one position running. And if you definitely had more than one position running on the US Tech yesterday, you would have locked in quite a lot of profit on the US Tech. So let's quickly run through a quick replay of what our expectations were yesterday before we dive into what our plans is going to be like for today. So during the live session yesterday, we were around this point here. We were around somewhere around the $11,200 level here. This is where we were during the live session yesterday. And remember, prior to the live session, we had this bullish momentum running where I told you that we want to be moving our stop loss accordingly to lock in some profit right around the $11,190 level. And we actually identified two structures here to guide our momentum. Well, the first one is this temporary bullish trend line. After connecting the series of higher lows here, we had this temporary bullish trend line figured out, and we said this trend line shall be guiding our buying opportunity as long as price remains above that structure. Then, in addition to the trend line here, was the structure between the 11,275, as we saw price action was caught within this flat channel in the last 24 hours. That was during the live session yesterday, and the $11,200 area. And so, with this huge consolidation phase here, we said we want to remain patient here to look out for structures to join either a bullish momentum or a bearish momentum. So we were looking out for either a breakout of the 11,275 to buy the US Tech, or a breakdown of the $11,200 level to sell the US Tech. And in fact, the latter was what happened here as we finally saw the breakdown and multiple rejection of the $11,200 level on our lower time frame to give us that confirmation to join that decline to the downside. And in fact, price moved, took us out of the previous buy position here with some profit. I think we had about, how many pips was that? We had about 60 pips thereabout on that buy position before we were taken out. Had the site at the appearance of the selling pressure here. So we took advantage of the sell move right below the $11,200 level, and this gave us over 430 pips in profit as price tested the $10,800 level. So for those who have been part of this profitable trading journey in the last 24 hours, kudos to you guys. Well done for being on standby to take advantage of that move. So now that we are heading into the New York session today, what is going to be our plans? Well, if we look at the current structure here, well, first of all, I would like to make some deleting here so that we can have a clean chart to work with. So I will have to delete this one as this is no longer relevant here. All right. Okay. So that's what we have here. So now, if we look at what has been happening here in the last 12, 16, 18 hours now, we saw that as soon as price tested the $10,800 zone here, we have been witnessing buy pressure from that level. And one thing for sure is that whenever we have an impulsive move like this, we should be expecting that at one point in time, there is a tendency that we could be witnessing a retracement of that impulse leg into somewhere around our golden zone area, which might likely be between the 50 and the 78.6 of the previous impulse leg, where we shall be looking out for selling pressure to join the decline to the downside. But before I go into the details of what our expectations are for today, I would like to scale up to the daily time frame and let's have an holistic view of what is really going on in this market. Then we come back here to make a decision for today. Now, scaling up into the daily time frame, let's see what we have on the daily time frame. Well, On the daily time frame here, the first thing we observed at the beginning of the week was the fact that price has been on a long-term bearish momentum. As you can see here, after connecting the series of lower highs, we had this bearish trend line figured out, and you can see the bearish trend line on your screen with the black color. Now, things got a little bit interesting during the month of June around the $11,000 level. As we see here, as soon as sellers got into the structure, we saw negating pressure from the buyers, negating all selling attempts to break down that structure. The same thing happened here during the month of later part of the month of September, stroke the first day of the month of October. We saw buy pressure here, but now there is something here that made this structure a little bit exciting here. Now, we saw that as soon as the buy pressure started here, we saw that as soon as it gets into the $11,700 mark here, we started seeing selling pressure coming from that area to give us a clue that sellers are still very, very present in this market. And in fact, the selling pressure here lasted for over a month here, as throughout the month of October stroke the first couple of days of the month of November, we have been witnessing selling pressure right below the 11,700, making that level a major determinant of price action. Now, during the second week of the month of November, we saw this engulfing candle, which took price out of the structure, breaking out of the 11,700. The first time in 6 weeks, we saw the breakout of the 11,700 during the second week of the month of November. And since the breakout of the $11,700 level happens, what we noticed here was that price was caught within a huge consolidation phase, emphasizing the indecision in this market at this particular point in time, as participants were not sure if the breakout of the structure might likely incite another bullish move, or this could turn out to be a false breakout that will send price crashing to the downside. So in that regard, we identify the structure here, the channel. We had the resistance point at the 12,050. Then we had the support level of the channel at the $11,500 level. Now, with a sharp rejection of the 12,050, which also shares a confluence with that bearish trend line we identified earlier, that was a sign that sellers are still very, very present in this market. And this actually led to the breakdown of the support level of that channel at 11,500 to send a signal of a strong bearish momentum coming in at this point. So we had our TP target here a couple of weeks, remember, we took advantage of that bearish move. And since the beginning of this week, we have seen our price action has been consolidating within that $11,200 level to give us a clue of a possible indecision in this market. So right now, as at yesterday, we took advantage of the bearish move here as price broke down that 11,200. So now the question right now is that, will this bearish momentum continue, or we could be having another wave of bullish momentum coming in here if we start seeing reversal patterns around this area? So now going into the New York session today, we have seen that the candle yesterday closed in what looks more like a hammer candle, as we can see sharp rejection of the $10,800 mark area, giving us a clue that there is a presence of buyers in this market. Now, if we zoom back into the past year, to if we go to as far back as the month of June, we can see that how the $10,800 level has been a major niche for buying power in the past, and we can see the evidence of this as we can see traces of buying pressure coming in around this area. So one thing we are going to be looking out for on the lower time frame is to see how price action is actually relating to the $10,800 level here to give us a clue of what our next line of action is going to be. So are we going to be having a trend continuation pattern here, probably a bearish rectangular pattern, which might lead into the breakdown retest of the structure to incite another wave of bearish momentum to the downside? Or are we going to be seeing a reversal pattern around here, probably in the form of a double bottom structure, or probably an inverse head and shoulder that might incite another wave of bullish momentum, which might likely be a retracement of the previous impulse leg back into the $11,500 level before another wave of bearish momentum will happen. And remember, we had the $11,500 level broken during the course of last week's trading session, and we till this moment we are yet to see a retest of that structure. And from a technical standpoint, whenever we have a breakdown of a structure, there is always a tendency that price might likely come back to do a retest of that structure to incite another wave of momentum in the direction of the prior leading price action. So these are the things we are going to be looking forward to on the lower time frame. So is this going to turn out to be a reversal pattern today, or is it going to turn out to be a trend continuation pattern that will be sending price crashing further to the downside? So in that regard, join me as we scale back down to the 1 hour time frame, where we want to be seeing what is really going on around that area. That is the 10,800 and the $10,900 zone, to decipher what our next line of action is going to be. So right now we are back at the 1 hour time frame, and we are back to the current structure we identified earlier. Now, the first thing I wanted us to see here is if I bring out my line chart here and then look at the previous low we had there that was broken. So we saw the breakdown of this previous low here. That was at the beginning of the week. That was on Tuesday. We saw a buy pressure around this area, and then we saw a breakdown of that structure, and then we have been witnessing selling pressure around that area, giving us a clue that sellers might likely come in from that area. So to make things easier on the high, I want us to connect this point and this point together so we can identify that structure there, and we shall be using that as a yardstick for trading activities for today. So I will be looking at, let's see, how will that be? 10,970, 10,950. Where will that fall on to? So I'm thinking the $10,960 level seems most appropriate at this point. So for the sake of clarity, let's label this $10,960 level. So this is going to be our yardstick for trading activities for today. So we already have a structure identified right now. And then we can see we had buy pressure here at the beginning of the week. We saw buy pressure. We saw the breakdown of the structure. And we have been witnessing selling pressure right around the $10,960 level in the last 12 hours here. So now there are two things we are going to be looking forward to during the New York session today. So if price continue to if we continue to see selling pressure right below the 10,960, that is, we see something like this, price comes down, and then we start seeing selling pressure below the structure, we'll have no choice than to join that decline to the downside. And if a further breakdown of the $10,800 level happen with a retest of structure, we want to be joining, adding more position to our sell position. However, if price breaks out of the 10,960, which appears to be happening right now, we can't say it's a breakout yet because this candle is yet to close, as it's still about how many hours old now? 30 minutes old now. It still has 30 minutes left, so we can't say this is a breakout here, but it's looking as if it wants to break out the 10,960. So if a breakout of the 10,960 happens actually, and we start seeing buy pressure above that level, then this might likely be a retracement move, the continuation of a retracement move into our golden zone area. And if you are a scalper or a counter trend trader, you might likely want to take advantage of that move with the hopes of getting a minimum of 150 to a maximum of about 250 pips to catch there. But if you are not a scalper or a counter trend trader, well, I would advise that you remain patient and wait out for this retracement phase to end, after which we want to be looking out for selling opportunities to join the decline to the downside. So in order to make things easier, looking out for selling opportunities, if price breaks above the 10,960, we are going to be using our important tool, that is the Fibonacci retracement tool, running it through the previous impulse leg, and we shall be aiming around the 50 and the 78.6% of the previous impulse leg as an area we shall be looking forward to for selling opportunities that will take us on a journey to join the second wave of bearish momentum. So at this point in time, I would like to label this area TP target for scalp buying. Let me name it that way. TP target is called scalp buying. Then we have sell window for those who would like to wait out for price to retracement phase to end. before joining that decline to the downside. So let me place this right inside that box, and let me give this box a yellow color so that we can see things more clearly here. And now I delete this. So what I'm saying right now is that we have this area. So like I said, if you are a scalper, you want to take advantage of that buy opportunity. If we see a breakout retest of the structure on our lower time frame, you might want to join with your TP target sitting somewhere around the 11,050 and the $11,200 area. But if you are not, you don't know how to manage such trades, let's remain patient here and wait out for this retracement to end. And the only way we can know this retracement phase has ended is when we start seeing reversal pattern. It could be your double top structure, it could be your inverse head and shoulder pattern, it could be your rising wedge, whatever it is. Look out for breakdown retest of structure around this area, selling pressure on our lower time frame, then we could actually join that decline to the downside. So this is what we are going to be looking out for on the US tech for today. So let's wait out and see how this move is going to go out for the New York session. So like I said earlier, to make things a little bit easier, we've already identified a simple structure around the 10,960, where I said if a breakout of the structure happens, then I want to be seeing this as a retracement of the previous impulse leg. Remember, we had this impulsive move that started midweek of this week. We saw moving down to the 10,800, then this is likely going to be a retracement of that previous impulse leg, and we shall be looking at the culmination of the retracement phase within the the $11,030 level and the $11,200 area. So we are going to be looking out for selling opportunities between the zone here. So this might likely come in the form of a reversal pattern. I hope you know your reversal patterns very well. Your double top, inverse head and shoulder pattern, whatever it is. Look out for selling opportunities on lower time frame. Then we want to be joining that decline to the downside. So these are the scenarios we shall be looking forward to on the US tech. So we still remain very bearish on a long-term perspective here on the US tech for today. So if you have any questions, feel free to drop your inquiries right in the comment section. I will be taking the next 10 to 15 seconds to read through the chat and see if there are any questions before I move on to the next pair. So I can see 669, good morning to you. Uh, Fado Shopping says hello. What about gold and oil? We already treated oil. That was the first commodity we treated today. So if you had missed out on that session, well, I will advise you stay tuned in when we to the end of the session when we do a quick recap of what we talked about today. And for the gold, we'll be treating the gold in the next couple of minutes, so stay tuned in. Then I can see 595 here says that he doesn't understand trading. Well, I would, that's a topic for another day. What we do here, for those who are traders already, what we do here is to come here and analyze the financial market, get ourselves prepared for the New York session. So we come here to identify trading opportunities that we can actually take advantage of during the New York session every day. We actually do this every day. All right. So if you be part of the session on a daily basis, I am very sure with time you get to understand how this works. So 052, good morning to you. Malia say why I can't see it. Well, I will advise that you restart your app. It might be from your end. SLV USDJPY. Of course, we are going to be treating USDJPY. USDJPY is part of the as we have been monitoring since the beginning of the week. So stay tuned in so that you don't miss out on the ideas we shall be dishing out on that. Then Rosano, good morning to you, Rosano. How are you doing today? SLV, it's okay. We are going to be looking at the USDJPYs. Just stay tuned in, all right? Okay, in the absence of no questions, I want to assume that we are good to go. So let's move on to the next pair. And the next pair we are going to be looking at right away is the USDJPY. So SLV, here we go. The USDJPY. So on the USDJPY, we have been profitable on this pair this week, despite the fact that we missed that huge move that broke down the 136.00 level, where I personally missed that move. I missed this breakdown of that structure, but some people actually took that move and they will be massively in profit at this particular point in time. However, we missed that move. Well, a couple of days ago, we were able to find another trading opportunity right below the 132.750 level here, where we took advantage of the sell momentum here, which gave us about how many pips was that? About 200 pips in profit on Tuesday, I guess. Yes, that was on Tuesday. We had a 200 pips profit to close with on that Tuesday. Now, since Tuesday, now in the last 72 hours, there is something very, very peculiar about most of the major pairs we have been monitoring this week. Most of them has been caught within a consolidation phase. And whenever we see a consolidation phase like this, it further emphasizes the indecision in this market. And what this simply means is that there is no liquidity in the market as the major players have withdrawn their funds in anticipation of a major event that is might likely be coming up. And one thing we saw here on the economic calendar this morning is the fact that we have a couple of major events coming up today in the form of the durable goods order and the non-defense capital goods order coming up in, I think, an hour, 30 minutes from now or 2 hours from now. And participants in this market will definitely be looking forward to see how this how the data in of this event is going to be driving price action. So now, with the current structure we have here, we have price caught within a channel here between the 132.750, a level which has been holding selling niche in the last 72 hours, and we have the support level at the 131.600 level here to give us that indecision phase right now. However, during the live session yesterday, what was our expectation on the US oil? Well, during the live session yesterday, we had a scenario here where price we've been witnessing buy pressure. As soon as price got into the 131.600, we saw that buyers were negating all selling pressure. The same thing happened here on Wednesday. We saw buyers negating all sellers attempts to push price to the downside. And during the live session yesterday, we started seeing this buy pressure come in. And one thing I stated here is that we want to wait out for a breakout retest of the 132.350 Japanese yen level for us to be able to join a trend continuation to the upside. And this is exactly what happened here. We saw our price broke out of that structure, gave us enough time to join as we had multiple buying attempts around this area. It will give us that opportunity to join. And if you are taking advantage of that opportunity at the 132.350 level, kudos to you for being on standby to catch that move, as you will currently be running with something about 28-30 pips in profit right now. Well, now that we are going into the New York session today, one thing I want us to note about this structure is how strong the sellers are at the 132.750. Now, look at what happened here on Tuesday. We saw selling pressure from this level. We saw again what happened here on Thursday. That was yesterday. We saw selling pressure from the 132.750. And during the early hours of today, we have been witnessing selling pressure around that area. And what does this simply tell us? It simply tells us that sellers are still very strong in this market, as even all the attempt by the buyers to break out of that structure has been negated by selling pressure around that area. So it tells us that we need to be very, very mindful of what's really going on here. So in order to make things easier, the first thing we want to be doing for those who are taking advantage of the buy position here is to move your stop loss accordingly. And I think somewhere below the 132.400 will seem most appropriate to place your stop loss right now. Protect your position just in case selling momentum comes in. We will not be stopped out in a loss on the trade. Now that we are going into the New York session today, what are we going to be using as our yardstick for trading opportunities? Well, the first one we are going to be using is this bullish trend line. So I will be calling this a temporary bullish trend line right now, based on the fact that we have been witnessing selling pressure in the last 72 hours, 72, 96 hours now. And one thing we did here was to connect the series of higher lows. We identified buying pressure here. So we connected it and it gave us that temporary bullish trend line for now. So this trend line is going to be guiding our trading activities for this week, for today rather. And how are we going to be using this trend line to guide our trading activity? Okay, fine. We are going to be looking out for buying opportunities above that trend line. If price breaks down that trend line, then that negates all buying attempts on the USDJPY. So in that regard, for those who had missed out on this opportunity, if you are looking forward to buying or adding more position to our USDJPY trade, I want to see price take us out of the 132.750 taking out all the sell position that we have been witnessing here in the last 76 hours. And let's see if a breakout happens, then we start seeing buy pressure above the structure, then that will give us an opportunity to add more position to our existing trade. And if you are not yet in this trade, it's an opportunity for us to join the potential rally from that level. And as you know, we are anticipating a major event coming up in an hour, 30 minutes from now. As you can see here, we have been witnessing consolidation phase around this area. Buyers are knocking at the 132.750, trying as much as possible to break out of the structure. So we want to be patient and see if we are really going to see a breakout of that structure. So like I said, we wait out for the breakout. Immediately a breakout of that structure happens, we want to be scaling down to our lower time frame to look out for buy pressure above this level. Then we add more position to our existing trade. Now, if price breaks down the bullish trend line, what happens? Now we have a 132.500 level here, which also shares a confluence with that bullish trend line. So if at any point in time during the New York session today, price breaks down that bullish trend line, which also shares a confluence with the 132.500, with selling pressure below the structure, then that will be a very good opportunity for us to join the trend continuation to the downside. So this is what we are going to be looking out for on the USDJPY. Though it looks a little bit dicey, but it's a very simple setup that we have here. So I've made things a little bit easy for us during the New York session today. So we have two structures that will be guiding our buy trade for today, and that is the bullish trend line here. As long as price remains above the bullish trend line, we want to be comfortable in our buy position. And for those who had missed out on the buy opportunity, a breakout of the 132.750 followed by buying pressure above the structure in our lower time frame is a very good opportunity for us to join or add more position to our existing trade. However, if a breakdown of the bullish trend line happens here, and which also shares a confluence with the 132.500, that means the bullish trend line is no longer strong enough to hold buy pressure, then followed by selling pressure below the structure, will be giving us a confirmation to join that decline to the downside. And if a decline to the downside happens there, that is a breakdown of the 132.500 happens, followed by selling pressure on our lower time frame. In the meantime, I will be placing my take profit target somewhere where the demand zone is at the 131.100. And the reason why I'm going to be doing that is simply because of this level has been holding by pressure in the past here. So let's see how price action will relate to that structure. Now, there is a catch here. As soon as price breaks down the 132.500 and selling pressure comes in here, we have some couple of structures here that we shall be using to guide our trading activities. So as soon as price gets into the structures, we want to be locking our profit and watch out to see how price action will relate to the structures. If a further breakdown happens, then we want to be adding more position to our sell trade. So this is the 131.600, 132.200, 132.350. Breakdown retest of these levels should be giving us a leverage to add more position to our existing trade. So it's a very simple setup here. If you have any questions anyways, let me know in the comment section and I will be willing to shed more light on this. So let me see what is happening right here in the comment section. Okay, I hope SLV was around during the explanation. If you have questions, feel free to drop your inquiry. Okay, you're welcome, SLV. Rosano, hi, how are you doing today? Cairo Karim, good morning to you, and how are you doing? Merry Christmas. All right, so in the absence of no questions here, I will like to move on to the next pair, and the next pair is the XAUUSD, and that is the gold. Well, for the gold yesterday also, we had a very, very, very impressive move on the XAUUSD yesterday as price action moved just as expected during the live session yesterday. So during the live session yesterday, what was our expectation? What was the structure we were able to identify on the 1 hour time frame? Now, on the 1 hour time frame yesterday, we had a very simple setup in the form of a flat channel, as we saw our price action has been caught within the $1,821 level, which is the resistant level of the channel. And then we had the support level of the channel at the $1,814 level. Remember, we have been profitable on this trade since the beginning of the week as we took advantage of this buy opportunity at the above the 1,795, if you remember vividly, and we rode the move all the way up into the 1,821. And during the live session yesterday, I told you how you should move your stop loss accordingly to lock in some profit right below the 1,812. I guess I'm not sure I can remember that, but I told you to move your stop loss somewhere right below the structure as we continue to expect to wait out to see how price is going to relate to this flat channel here. So we had two expectations that we were looking forward to yesterday, either a breakout of the 1,821 to give us a signal of a bullish momentum, or a breakdown of the 1,814 to give us a signal that sellers are coming in at this particular point in time. And this is exactly what happened yesterday. We saw the breakdown of the 1,814 level after the major event that came up yesterday. Which major event was that? I think it was the GDP. Yes, the GDP analyzed product, and it was a positive data for the US dollar, which gave that impulsive move that started yesterday. And if you are taking advantage of that move and rode it all the way to the 1,785, you will currently be running with over 3,000 pips in profit approximately right now. Well done to you guys if you are taking advantage of that move. Well, personally for me, I closed my trade at the 1,795, and when I saw a breakdown of the 1,795 during the New York session yesterday, I shared this on my public platform. I sold this move below the structure, but unfortunately I was taken out with some small profit after the breakdown of the 1,795. So kudos to you guys for being on standby to catch that move yesterday. Now that we are heading into the New York session today, and what do we have here since the beginning of today? So as soon as price tested the 1,785, something interesting happened here as we started seeing buy pressure coming in as price action transitioned into higher highs and higher lows, which finally led to the breakdown of that 1,795 the second time this week. Remember, we took advantage of a buy opportunity above the 1,795 at the beginning of the week here, and it appears price has broken out of that structure one more time again, and you will know that this level has been holding by pressure since in the past here. And again, we had this, so I took advantage of a breakout retest of the structure. If you are taking advantage of this, well done guys for being on standby to catch that move. So as we head into the New York session, let's see how we want to be taking advantage of this move. If you had missed this, let's say if the market is going to be presenting us with a second chance. Now, another thing about the structure is the fact that remember that price retested the 1,785 by pressure above that structure, which also shares a confluence with this bullish trend line that we have here. So I would like to scale up a little bit to the 4 hours time frame so I can show you how important this bullish trend line is at this particular point in time. So right here on the 4 hours time frame, this is what we were able to decipher on the charts on the 4 hours time frame. So we have this bullish trend line figured out on the 4 hours time frame at the beginning of the week after connecting the series of higher lows here since the beginning of the month of November. We have been witnessing buy pressure on the XAUUSD. As you can see here, we connected the higher lows. And one thing that happened yesterday was quite interesting. As soon as price got into the area where that bullish trend line is, we saw a buy momentum come in from that area, which continued to push price to the upside. So is this going to be another wave of bullish momentum? Will this bullish trend line incite another wave of bullish momentum, or the breakdown of this bullish trend line yesterday is a sign that sellers are still very strong, and this move might likely be a retracement of the impulse leg where we should be getting ready to join another wave of bearish momentum. So this is what we are going to be looking at during the live session. So let's quickly look at what is really going on here. Now that we have the situation here, the last time price tested that bullish trend line was here, and that was last week. Okay, no, sorry, it was this week, early days of this week. We saw price come into the 1,821, and we started seeing selling pressure around that area. Remember that level has been a strong selling niche for participants in this market since the beginning of the month of December. I think it's going to be good for me to give you an holistic view of what is happening on the daily time frame here before we go into the details of what our expectations are for today. I think so. Let's scale up to the daily. So we are on the daily time frame here. And on the daily time frame, it's obvious that we are on a bearish momentum since at least since the month of March this year. Well, the most important structure here on the daily time frame is the $1,800 level. And if you look at how this level has been determining price action since the beginning of the year, it's quite impressive. Look at what happened here during the first couple of months this year. This was between November and February of this year. We saw accumulation of buy pressure around that area. So this level has been a strong buying niche for participants in this market. Then we saw again in the month of May, we saw buy pressure around this area as well. But the pressure there wasn't strong enough as it was negated by selling pressure around this area, which finally led to the breakdown of the $1,800 level in the month of July. And since the breakdown of that level happened, we have been witnessing selling pressure below that structure. We saw a retest of structure here in the month of August. And you can see what has happened here. Price is back into that structure. And in the last couple of weeks now, price has been consolidating around that area, further emphasizing the indecision in the market at that particular point in time. And if we look at the current structure here and look at what has been happening since the later parts, second half of this year, we saw that the $1,800 level has been a strong niche for sellers. So I was able to identify this area as a supply zone. So right now, price is currently trading below the $1,800 level. And at this point in time, we want to be seeing this as, want to be patient enough to wait out for signals to give us a confirmation that price is either going bullish or bearish. Now, if price is going to go bearish here, we want to be seeing selling pressure below the $1,800 level, further emphasizing the strength of the sellers here. And if a further breakdown of the 1,785 is also a very good signal that we should be comfortable in our sell position. However, since we've had a couple of breakouts of the 1,800 since the beginning of this month, we can see that buyers are still, there's trace of buy pressure in this market. So buyers still have the tendency to break out of that structure. Since we already have a couple of breakouts since the beginning of this month, there is a tendency that buyers might likely break out of that structure. So we should not ignore the possibility that we could have a breakout of the 1,800 with buy pressure above the structure in our lower time frame to incite another wave of bullish momentum. So this is what I want to show you on the 1 hour on the daily time frame, the importance of the 1,800, so that we can have a better perspective of what we are talking about when I discuss this on the lower time frame. So right now we are going back to the 4 hours time frame, and let's see what I was trying to explain to you on the 4 hours time frame. So right back to the 4 hours time frame here. So as soon as price tested the 1,821, here we saw selling pressure here, which led to the breakdown of the 1,814, giving us a good bearish signal. Now, if we take this impulsive move into consideration, the buy pressure we see here that started yesterday is likely going to turn out to be a retracement of that impulsive move, which might likely incite another wave of bearish momentum. So this is a sign that sellers are very strong in this market, the sign that we had a breakdown of the bullish trend line here. So in as much I took advantage of the buy pressure above the 1,795, this is going to be a counter trend opportunity. So we are going to be looking at how far this retracement is going to go. And in order to project how far the retracement phase is going to go, we want to be using our Fibonacci retracement tool, run it through the previous impulse leg, and we should be aiming at an area between the 50 and the 78.6% of that previous impulse leg using that area. So if you had bought the XAUUSD this morning, that's a counter trend opportunity, well, you should be having this area as a TP target. So TP target for buyers, TP target for buyers. And if you are not a counter trend trader, then you wait out for price action to come within this area, and we label that area a sell window. So what we are going to be looking forward to right now is to place our TP target. If you are joined the breakout of the 1,795, We have a minimum of about 900 pips to catch here if you place your TP target at the 1,805. And we have a maximum of about 200 pips to catch here if you place your TP target at the 1,815. Now, what we are going to be looking forward to today, if price continues to the upside, is to see how price is going to react to the zone here. That is between the 1,805 and the 1,815. So it's a $10 zone here. So we want to see how price action is going to react to that structure. So if at any point in time when price gets into this area and we start seeing reversal patterns or selling pressure on our lower time frame, we want to be getting ready to join that decline to the downside. And if a further breakdown of that bullish trend line happens, this is the trend line, a trend line which also shares a confluence with that 1,795, that level which has been guiding price action for some time now, then retest of structure selling pressure below that level will also welcome additional position to our existing trade. So this is what we are going to be looking out for selling opportunities. And one thing I would like to state here is that if we at any point in time, if you are part of the buy position that is going on right now, please ensure you have moved your stop loss to break even, lock in some profit here, and let's watch out for how price is going to relate to the structure. But if at any point in time we have a breakout of the $1,821 level, well, at this point in time, I will advise that we remain patient and wait out for price to come back into the channel here, give up some buy pressure on our lower time frame before we can join that bullish momentum to the upside. So on the XAUUSD, from an holistic view, I still remain very bearish here on the XAUUSD, even though we have a counter trade position running at this particular point in time. Considering the fact that we have been witnessing selling pressure since the beginning of this month, well, I still hold the bearish momentum here. So like I said, we are waiting to see how price will relate to the structure here, if it will give us an opportunity to join the decline to the downside. But if price does not get that far, and instead we see price drop below the 1,795 one more time, well, selling pressure below this level, below this bullish trend line, is a very good signal for us to join that decline to the downside. So these are my scenarios on the XAUUSD to look out for. I hope you are able to screenshot my screen so that you can use it as a reference point when you're about to make your personal decision on the XAUUSD. If you have any questions regarding what I just explained so far, feel free to drop your inquiries in the comment section of this video. Now, I'll move on to talk about the EURUSD, which is going to be the last pair I'm going to be treating for today. And in fact, the EURUSD has really been very, very choppy since the beginning of the week. So if you are too attached to the EURUSD, it might give you a lot of headache for this week, as we can see our price has been caught within the 1.06450 level, which has been the resistance point since the beginning of this week. That is this level, and the support level at the 1.05850. And in the last 48 hours, we have neither seen a significant breakout of either the support or the resistance level of this channel, which further emphasizes the indecision in this market. So we're heading into the holidays. Most definitely there wouldn't be much liquidity in the market, as and we're also looking forward to a major event coming up in an hour from now. Let's see if this is going to drive price action for today. So I still continue to look out for selling pressure below the 1.0600 level. Remember how important that level is on the daily time frame. Let me quickly show you how important it is. We were able to identify that structure on our daily time frame, that this is it. So on the daily time frame, it's very obvious that we are on a long-term bearish momentum here, as you can evident with the bearish trend line we were able to identify here. And coupled with the bearish trend line is this 1.03750 level, which has been a major determinant of price action in the second half of this year. So we had a breakout of the trend line here, which also shares a confluence with the 1.03750, and price has continued to climb to the upside. But one thing I noticed here is that even though we have been witnessing buy pressure, the buy pressure isn't as strong if compared to what we saw at the end of the month of September. So what we saw here in the month of November, what you compare that with what we have here, you see that the buy pressure appears to be reducing at this point in time. And now, since the beginning of this month, we have been witnessing selling pressure around the zone between the 1.0600 and the 1.07350 level, giving us a clue that sellers might likely come in at this point. And if you look at the week of the candles here in the last 6 days, you can see that we have sharp rejection of the zone. So one thing I'm looking forward to here is tending towards bearish for me on the Euro USD. So I will be waiting for price to break down to 1.0600 level with selling pressure below that structure my lower time frame to join that decline to the downside. So that is what I'm trying to show you on the 1 hour time frame, how important the 1.0600 level is. So let's scale back down to the 1 hour time frame and look at how that structure is positioned within the channel we've identified since the beginning of the week. So this is the structure here. This is the 1.0600 level here. So like I said, if price breaks down that structure, I want to be looking for selling opportunities. And since yesterday, we have been witnessing buy pressure here. And as a result of that, I connected the higher lows here to give me this temporary bullish trend line in the meantime. So I want to be seeing a breakdown of this trend line, sharing a confluence with the 1.0600 level with selling pressure below the structure. Then I want to be joining that decline to the downside. I still remain bearish on this one. If price action drops below the 1.06 level, I will be selling. However, if at any point in time today, price breaks out of the 1.06450 level significantly well with buy pressure above the structure, then I will be thinking of buying the Euro USD for today. So in that regard, I will be, this is the last pair we'll be talking about for today. So let's quickly do a quick recap of what we talked about today so far before I drop the curtain on this live session. Now, the first commodity we talked about today, was the US oil. And remember, we've been profitable since the beginning of the week as we took advantage of the buy position right above the $75 level. And we had multiple entries on this one. But unfortunately, though, price was unable to hit our TP target and we were taken out at around the $78.85 level, though we made some profits, over 1,000 pips we made on the US oil. So once again, congratulations to you guys for being part of this profitable journey. And during the early hours of today, we took advantage of the breakout of this channel, and we're currently running in profit at this point in time as price is currently running with about 54 pips in profit. So I told you that for those who had missed out on this opportunity here, let's remain patient. So we took advantage of this move here. And if you had missed out on that move, I would advise that you remain patient and let's wait out to see if price is going to get into the $80 level. Remember how important that level is in the past, which has been a strong determinant of price action. So we want to see how price action is going to relate to that structure. And the reason why I'm saying that we should hold on for price to break out of the $80 level is because of the selling pressure we saw right below the structure during the course of the New York session yesterday, which might likely be a signal that sellers might likely come in here. So if price is unable to break this previous structure, we might be seeing a reversal pattern in the form of a double top structure, which might incite another wave of bearish momentum. So we want to be getting ready if that is going to be the case. But if a breakout of the 1.800 level, $80 level happens with buy pressure above the structure, then we want to be thinking of adding more position to our existing trade. So that is my view here on the US oil. Then we went on to talk about the US tech, where we made some profit yesterday. At least we made a minimum of 430 pips if you had only one position running, and if you had multiple entries, you would have made much more than that. Now, going into the New York session today, we identified buy pressure resume at the $10,800 level, and this has continued to climb higher highs. And one thing I stated here is that this might likely be a retracement of this impulse leg that we had here in anticipation of another wave of bearish momentum. So to guide our trading activities for today, we had a simple setup we identified here at the 10,960, where I said this level has been holding by pressure at one point at the beginning of this week. Then we saw the breakdown of that structure here to emphasize the strength of the sellers. So we've been seeing selling pressure around this area, which has a tendency of pushing price further to the downside. So I said for those who are scalpers or counter trend traders, you might take advantage of the bullish move if price breaks out retest of the structure on our lower time frame. Join the rally into the upside here with your TP target sitting between the $11,050 and the $11,200 level, which will be fetching you a minimum of 60 70 pips to a maximum of about 240 pips here. But if you are not a scalper, let's remain patient here and wait out for this retracement phase to end before joining another wave of bearish momentum. And how do we identify if the retracement phase has ended? Well, I was able to identify a structure here that is between the 50 and the 78.6% of this previous impulse leg, where I said we shall be looking out for selling pressure or reversal patterns around that area on our lower time frame to give us a sign that sellers have come in. Then we could actually join the second wave of bearish momentum for this week if it will happen before the week runs out. So these are the views we are looking forward to on the US tech. Then another thing I stated here is that if price does not go that far, does not go as far as this level, but instead drops below the structure, well, if that happens and we start seeing certain pressure below the 10,960, we would not have any choice than to join that decline to the downside. Now we moved on to talk about the USDJPY for today, which for the week so far we have been profitable though on the USDJPY. But something interesting happened here in the last 72 hours as we saw our price was caught within a channel that is between the 132.750, where sellers have been coming in, negating all buying attempts, and then we have the support level here at the 132.200 Japanese yen level. So within this level, we have been witnessing some consolidation phase around this area, further emphasizing the indecision in this market. And like I said, we're anticipating a major event coming up today, so we don't know how price action is going to react to that event. But one thing I know for sure is that if we have the breakout of this channel of the structure, we're definitely going to be having a massive move. So in order to make things easy for us during the New York session today, I was able to identify two structures that we shall be using to guide our buying opportunity on this one. Remember, we are already running in profit with this one as we took advantage of the buy opportunity at the 132.350. And I've told you to move your stop loss accordingly to lock in some profit so that we don't get caught up in any sudden pullback that might take us out of this current position. Now, like I said, we have two parameters that we shall be using as our yardstick for trading buying opportunity for this week. And the first one is the bullish trend line that we can see here. After we connected the series of higher lows, we have this bullish trend line. So what this simply means is that if price continue to remain above this bullish trend line, we want to be comfortable in our buy position. And for those who had missed out on this opportunity here yesterday, well, I said let's wait out for a breakout of the 132.750. That is, price action takes out all the sell position around this area to give us a signal that buyers are stepping into this market. And if we are lucky enough, we start seeing buy pressure above the structure, we want to be joining or adding more position to our existing trade. However, if price breaks down the bullish trend line here, takes us out of the buy position that we are in right now, look at that trend line. It also shares a confluence with the 132.500 level. So if a breakdown of that structure happen and followed by selling pressure below the structure, we want to be joining that decline to the downside. And I said we should be having our take profit target around the 131.100 if a breakdown of the trend line and the 132.500 happens. And if price continues to the downside and touches all the structures, this one 132.200, we move our stop loss accordingly, lock in some profit. And if it moves further, breaks down the 131.600, move your stop loss accordingly, break down retest of the structure, add more position to your existing trade. So this is what we are going to be looking out for. So for me personally on this one, I'm still holding on to a bullish momentum here on the USDJPY, but if price breaks down the 132.500, well, the structure is stating otherwise, then we get ready to sell at the breakdown of the 132.500. So for those who had been part of this trade, please remember to lock your profits, move your stop loss accordingly as we wait out for the breakout of the 132.750 for another opportunity to add to our existing trade. So that is that on the USDJPY. Then we went on to talk about the XAUUSD, and on the XAUUSD, we were in massive profit on the XAUUSD yesterday as we were able to catch over close to 3,000 pips in profit on the XAUUSD. And with the breakout of the 1,795 level this morning, following the retest of the 1,785, I'm of the opinion that we are going through a retracement phase of this impulsive move right now. And as a result of this, I was able to identify the sell window around here where I said we shall be looking out for selling pressure within this area to incite another wave of bearish momentum. So I told you I took advantage of the buy opportunity here. So if you are part of this trading journey that we took here right above the 1,795, you want to be moving your stop loss accordingly, lock in some profit here, and let's see how far this retracement phase is going to go before the second wave of bearish momentum will happen. But if price does not go as far as this level for the retracement move, and instead we cite a breakdown of the 1,795 one more time, breaking down that bullish trend line we identified on the 4 hours time frame, then we might likely be looking out for selling pressure on our lower time frame to join that decline to the downside. So that is the view we have on the XAUUSD. A very simple setup we have here. So I wish we'd be on standby to catch that move when it finally happens. Then we close the day with the EURUSD, and on the EURUSD, I told you how choppy the situation we have here since the beginning of the week is quite messy, and if you are too attached to this pair, it will be so stressful to the mind. So even though it's stressful to the mind, we have a way of finding a way around such scenarios, and that is by using our technical skills to identify a market structure which we shall be using to guide our trading activity. And in this regard, we were able to identify a simple setup here in the form of a flat channel, as price action has been consolidating between the 1.06450, which is the resistance level of this channel, and the 1.05850, which is the support level of the channel since the beginning of this week. So we have been seeing selling pressure around this area and buying pressure around this area. And whenever we have structures like this from a technical standpoint, we want to be waiting, we want to be patient enough to wait out for a breakout or a breakdown of that channel to give us a signal of where price will be going. So we either see a breakout of the 1.06450 level to give us an opportunity to buy, or we look out for a breakdown of the 1.05850 level or the 1.0600 level, this level here, to sell the EURUSD. And before I close, I would like to let you know, for those who had missed out on the session on the EURUSD, how important the 1.0600 level is. And we identified that on the daily time frame, which I quickly showed you on the daily time frame during the EURUSD session. So we had the structure here. So on the daily time frame, it's obvious that price action has been bearish, but I want to show you how important the 1.0600 level is. Now, since the beginning of this month, we have been witnessing selling pressure below that structure, though we had the breakout second week of this month, as you can see here. But one thing you will notice around this level, after price rejected the 1.07350, we saw this week. Look at the nature of this week here. In the last 6 days here, we can see that it has a tendency of selling pressure, and that is the channel we identified on the 1 hour time frame. So what we are going to be looking forward to at this point, considering the structure we have here, I want to see price break down the 1.0600 level, which I showed you on the 1 hour time frame, and if possible, I see selling pressure below that structure. It will give me a confirmation to sell the EURUSD for today. Well, if this does not happen today, well, we might be looking forward to it next week. But one thing that this structure tells me is that it's looking more bearish at this particular point in time. So scaling back to the 1 hour time frame, so we have already identified the patterns we are going to be looking out for to join that decline or rally, whichever case it may be. Now, since yesterday, we have been witnessing buy pressure here after connecting the series of higher lows here, which I will be calling a temporary bullish trend line in the meantime. So if a breakdown of this trend line happens, which also shares a confluence with the 1.0600 level, well, at this point in time, it will have been a good opportunity to join a possible trend continuation to the downside. But if a breakout of the 1.06450 level happens, then buy pressure above the structure should be confirming a buy opportunity on the EURUSD. So on this note, I want to be dropping the curtain on this live session. I hope you had a wonderful moment here, because I did personally, and I really appreciate every single one of you who have been part of this session since the beginning of the week. Shout out to you all. I love you all, and I look forward to seeing you same time on Monday, 10 a.m. UTC, 11 a.m. West African time, as we come here to review the market and identify trading opportunities that we want to be taking advantage of in the new week. So once again, I want to wish you Merry Christmas in advance and a Happy New Year also. and do have a merry, merry weekend. Bye bye.